Stock nerds and market lovers, a lot to discuss with you. Let's see, Hunter Mozingo, Don Vandenbord. We are Danny-less today. Danny packed up the Coup DeVille with the horns on it and took a road trip with the family. Yeah. I mean, it's the convertible Coup DeVille, right? He's driving because AK, as he claims, is not his wife, AK, isn't as good a driver as he is. And so when Danny plays this back in the car ride home, he'll hear that and he'll have to answer to AK for that.
Where does the Coup DeVille come from? Where did that start?
The Coup DeVille?
Yeah.
I think it was Donism. I almost imagine. Yeah,
That's good.
Do you remember the Dukes of Hazzard? Which, by the way, I don't know if you're allowed to talk, but Dukes of Hazzard have been canceled. Like as a TV series back in the 80s, they were canceled, but they've been recanceled because of the moniker atop of the General
The car,
Lee.
right?
Yeah, right.
Yeah.
But if you can imagine the character.
What have we come to?
I'm just trying to poke Don a little bit. This is my warm up for Don, right?
That didn't take long.
Yeah, wow.
Danny's not here. Normally, I prod Danny to get some kind of facial reaction out of him, but now I'm like, let me just gently start to poke Don.
Sure.
But can you imagine Boss Hogg? Do you remember what the character Boss Hogg looked like from the Dukes of Hazzard?
I don't.
Well, imagine Danny's Boss Hogg in a nice way, not a rotund, mean way.
No,
but a good, like it's the car that Boss Hogg drove in.
Yeah,
I'm pretty sure it was a Cadillac.
Coup DeVille?
Maybe not. I don't know. If someone could research the car that Danny Boss Hogg drove.
Yeah, Boss Hogg.
Hogg. And I'm pretty sure it had horns on it.
Right into the show. Tell us.
It does have the horns.
Yeah. And so Don painted that imagery years ago.
That's good.
Yeah.
That's good.
Yeah.
Really good.
And so like when Dan.
1970 Cadillac DeVille.
There it is,
White
baby.
1970 Cadillac DeVille.
Yeah.
Perfect. That's
yeah.
The one.
And so Danny loads up the white Cadillac DeVille
It's
and
the
he
road.
gets AK in there, gets Sid the kid in there and his kid and other kids, and he goes skiing.
You know, like, speaking of, last time we were here, there was a wintry mix, and he was driving a car. Did they make it all right? That can be a nasty drive.
I actually texted him a day later.
Okay.
Said, hey, man, just check and see if he made it.
Good.
He texted back a ski emoji. So
hitting the slopes.
Yeah, he's on the slope. So real quick, Suckners, this is a really interesting week for both bulls and bears with the way it closed on Friday of last week, the way the market started out on Monday. And then you kind of have this massive rebound. And a lot of people are confused, right? Like, this is not an easy market. I'm not being facetious, and I'm really not saying anything world beating here. But why and how could the market go up in the face of this 40-year high in inflation? The Fed is now going, they told you, the reason why the market started selling off on Wednesday, took a really steep nosedive on Wednesday, massive, some of the biggest downside ticks happened while right at the release of the Fed note saying we're going to raise rates. And what they said was they're going to raise rates cumulatively up to 7 times this year, which kind of expected, but they're raising it more than the projected mid rate of rates. And so the market sold off. But then Jay Powell kind of used that phraseology, the softness of we're data dependent, we're flexible. And then the market just had this massive rebound, throwing off both bulls and bears in one day. And then you've had this continuation, all while adding into the mix this rebalancing that's going on. And some notes on the rebalancing. If you don't understand what rebalancing is, it happens once a quarter. And for some reason, my mind always drifts to this first quarter's rebalancing. You probably won't even hear me talk about quarterly rebalancing the other 3 times this year. I don't know why, but the March rebalancing seems to be just this big onslaught of volume every year, and it's no different this year. So index funds, which are they're a huge part of the investment landscape, are like if you are S&P's got to rebalance, there's weight limits to the stocks that are in there. And if you're a specialized fund, there's weight limits to the stocks in there, and you can't get over a certain amount. So if you started out the year with some energy stocks, for example, in your index, and now energy's had this massive run, you're just by no fault of your own overweight energy stocks. And so being overweight energy stocks, hey, we got to pare this down per our bylaws, for lack of a better phraseology, our prospectus. And that's how you get all this massive movement in the market. Right now, though, there's $3.5 trillion of just index options that are set to expire today. This is Friday the 18th that we're taping it. We're taping it at what time is it? 10:20?
Yeah, 10 a.m.
Yeah, 10 a.m. time frame, Central Time. And you haven't seen the massive movement yet that the market's going to make. Like it's just going to be a really wide range, both up and down. You're going to, at some point today, the market won't be where it won't be, it's up right now, but it won't be like that as the funds start selling and adjusting and then buying what's been sold off. And like, well, what's been probably rebalanced upwards? Tech, right? But that doesn't mean that the move's going to stop. And so you want to respect both sides here. So I am going to show you something at home that still has me cautious on the bull side, even though, and I pointed it out. By the way, there's two really, there's I think a lot of good videos this week out of the 4 that have been done so far. Don's got, I have Don discuss the technical indicator he talked about last night. This one was the big tip off for me on Wednesday night.
Oh, yeah.
And so I want you, if you haven't seen it, by the way, go to the new Revere website, revereasset.com. You just go to daily markets and tomorrow's insights, excuse me. And then you'll see the video right there, and you can of course play them. But what happened with the VIX hasn't happened in almost a month, and the VIX futures have uninverted. And that's a really big deal. So these are fresh contracts. And so what that means is that traders are, now they're still close. 2672 is, oh no. No, I'm right. I'm sorry. I just got dyslexic for you. This is pricing below the May contract, which is pricing below the June contract. That's normalized. That's the way it should be. And that means that traders are not so fearful of this big market drop at the moment. If they were, the current contract with the shortest duration would be pricing above these two contracts. And that's just not the case right now. And so in spite of the Fed saying we're going to tighten up to 7 times this year, which a lot of people expected, but again, how much they want to tighten is still up for debate, and how they're going to trim their balance sheet, because that's the other component too, is still up for debate. And the rate tightening and the balance sheet reduction, those are two things that haven't ever taken place. But then you add in the specter of this high inflation, which we got some inflation numbers late last week, early this week. They're going to go up dramatically because of what's taken place since February 24th. That picture is not going to get any better. And so you take all this, and then you get these cataclysmic shifts in the markets. You get crude oil selling off and then coming back. And then you have this piece of information drop today from Bullard. And Bullard talks about the Fed President Bullard. He's the only one that dissented in the meeting from the other 8 Fed governors. And he said he wanted a 50 basis point rate increase, 0.5%. He didn't want this 0.25%. He wanted a 0.5%. And he writes a note this morning that says we need to kill inflation. And he wants to take, by the end of the year, the percent raise up to 3%. He wants the Fed to go up 3% by the end of this year, in addition to balance sheet reduction. And there's a lot of folks saying, well, that's just going to take us right into recession. And so the only way to kill inflation is demand destruction. So you've got to kill demand, right? And the housing market is having this moment right now.
Yes, it is.
And so there's not enough. Bloomberg had a piece out, which is pretty interesting, about stagflation has already hit the housing market. And so, and it makes sense that there's a supply chain issue: garage doors, cabinetry, cement, the lumber, the whole 9 yards, right?
Yep.
There's a supply chain issue with getting it to the job sites. There's record low inventory, and they can't build fast enough to satiate demand. Okay. So there's an issue there. Low inventory. So you're not seeing price reductions right now, even though the Fed has raised by 1/4 point. Someone's going to laugh out there that's older, that lived through the 80s and the 90s. So interest rates are now as high as they've been since 2019. But you're going to hear the words historically low. because in the early 80s, Don, how high were interest mortgages in the early 80s, mid 80s?
I have no idea. I
It-
wasn't
it-
buying a house
18,
then.
18%, 16, 18%.
Okay.
18. Yeah, I got 10% in 1987, and
Okay.
that was considered below average because it was through bond money, local bond money. But yeah, so like 12, even 10, 12% in 1987.
And so now interest rates are, I believe it's 4.46. When I checked this morning, is the price of the cost of a 30-year mortgage, which is what most people get.
Okay.
And so I refinanced, I think, at below 2 or below, at right when right after COVID had the shutdown had taken place in 2020. So now, if you think about it, it's twice as expensive for someone to stay, like just from 2 years ago. A 30-year mortgage is now twice as expensive.
Mm-hmm.
So when people say these are still historic lows, I think that's the wrong way to look at this.
Yeah.
Historically, yes, you're correct.
Mm-hmm.
But from just 2 years ago,
right, 700 days.
A mortgage. Yeah, thank you.
Yeah.
You know what? That's an even better way to put it. Thank you, Zach. 700 days ago, a mortgage was cost half.
Yeah.
Of what it does now, and I think that's the way to look at it.
Mm-hmm.
And so now you have this conundrum. Supply chain. We're going to use housing as the model here.
Yeah.
You've got supply chain issues, but they're going to get better, right, Tim? Surely they're going to get better.
Surely.
I don't know when. You have record low inventory, high demand. Prices aren't falling. The rate raise that you're looking to do to create demand destruction, to slow down people from wanting homes, is probably not going to have its desired effect. So you've got on one hand, right? You've got the scales of justice, right?
Yeah.
On one part of the scale, you have demand destruction taking place. Mm-hmm. In the last 700 days, a 30-year mortgage cost twice as much.
Yes.
Today, March 18th, 2022.
Demand should be destructive.
If you want to go up even more, you're going to get people that were struggling to get into homes 2 years ago. The struggle just got twice as hard. By the end of the year, it's going to get 3 and 4 times. If what Bullard says wants to come true, it's going to get 3 and 4 times more difficult.
Right.
And so then, what if the supply chain doesn't catch up? What if we still have these same issues? Because we don't make anything in America, right? And so what if we, except homes, where we can't get the loan.
Winners. Hey, come on. Yeah. Good people.
We make winners.
That's right.
Yes.
Good citizens.
We ship Carson Wentz to the Commandos. Are they the Commandos or the Commanders?
Carson Wentz.
No,
yeah.
I actually don't know.
That's a deep cut. I couldn't tell you.
Yeah, well, the Washington just changed their name. They went from the Redskins, which went to the way of Dukes of Hazzard. Mm-hmm. Then they were just the football team from Washington, which actually wasn't that bad of a.
It's the football team from Washington.
Nope.
What was it called?
I thought it was terrible.
Okay.
Oh, you didn't like it?
It was the Washington football team.
Dumb as
That's all
dirt.
it was.
Come on.
See, every like 7 minutes, there's a clock in my head that says something to get Don.
That's right.
That because I can lose myself in the charts just bring Don back into the fold. And
when Danny's not here, anybody's a target.
Every 7 minutes, there's a clock in my head just internally that says, say something.
Yeah.
Funny. No, but they shipped Carson Wentz. You loved Philadelphia Eagles quarterback Carson Wentz. He is not. I'll tell you what, if you run out on the Eagles, the fan base just turns against you.
Passionate fans. They got passionate
very
fans.
Passionate fans.
Very passionate fans.
And then Indianapolis, I don't think Indianapolis gets any better at quarterback. I mean, right? But that doesn't solve.
They haven't signed anybody yet, right?
No, they're looking to.
I didn't think so.
They're not land. I mean, who's out there, right? Deshaun.
I saw where they were interested in Jimmy G.
Ooh, you know what? That's a nice fit. If they get him. So anyway, what is
currently the Jaguars have the best quarterback in the AFC South.
I would.
Jaguars spent a lot of money recently. We got a lot of free agents.
Are the Titans in the AFC South? They've got that Ryan Tannehill. He's not that good.
I stand by my statement.
So
I said what I said.
More importantly, what are the Washington team called? Are they the Commandos or the Commanders?
Commanders.
Commanders. Because there was a cringeworthy.
And Deshaun Watson will be an ex-Texan within a day or two. So that will elevate Trevor Lawrence to the top of the list.
They got a good coach. The Jaguars do with Doug. Get Doug down there.
Another person who the Eagles fans recently turned on.
And the guy gets him to a Super Bowl, wins the Super Bowl, and the Eagles like, yeah, you know what? You need to leave.
Passionate fans.
Passionate fans.
Passionate fans in the
Passionate fans.
Philly Eagles, passionate
fans. So look, there's a tug of war going on right now with the markets in terms of what the Fed's job is to do right now, which is to kill inflation, and it's going to get worse politically. And you're like, well, the Fed's not supposed to be political. The Fed's political. They're going to have to get serious. That's what Bullard was saying in this note that he sent out. And you can just Google it, Bullard note from Friday, where he wants 3%, and he wants to prove to the public. He says this in the note. I want to prove to the public that we're serious about killing inflation. Well, that's just two words, man. Demand destruction. How do you do that? So you raise rates to the point where people are challenged to get a home. The Fed just through one action of their own has done that. The mortgage rates have doubled since 2020. Okay. Wages haven't kept up with inflation. Man, but on the backdrop of that, you have the markets rally. And so the signals that we point out to you through the videos, through, just the red meat videos where you go to Revere Asset and you click on Tomorrow's Insights. Those are the truth. And that doesn't mean to denigrate anyone or anything. That's just what's taking place. There's a backdrop that's very bearish, but you need to be able to see through it. It doesn't mean the market's going to take off and go hit new highs. I don't know if right now I don't see that, but I see what the truth is. That the VIX uninverted on Wednesday, and it's one of the most bullish signals I have to lead me to like, okay, prices have a chance to really go higher here. That I understand what rebalancing means, and that when things get beat up so much in the first quarter, like technology has, like if you've seen, Zach is really into technology, like computers.
Yeah.
Like if I said, Zach, let me show you a chart of NVIDIA, which I think, Don, do you own NVIDIA?
Absolutely.
Yes, Don owns NVIDIA.
I've been trying to get a graphics card from NVIDIA for 2 years
because
they are so hard to get because they are so high in demand.
Up 5.5% today.
Yep.
So, but look at where it's come from. So you're having it from 346 back in November down all the way to 205, and that's one of and they don't suffer from lack of demand.
No, they don't.
So you've had this demand. You've had this group of stocks, and we'll just go label them as all technology. High PE stocks, price to earnings ratio stocks, known as high multiple stocks, get destroyed. Now they're underweight in all these index products, all these index ETFs, all these index mutual funds. Anyone who has a proxy to own a certain percentage, well, you're most likely underweight that percentage as prices decrease. And now you're seeing the high multiple stocks bounce. And being able to see...
Tim?
Yeah?
TOTT, right?
What's that?
We talked about that last...
Tell me what it reminds...
off the 200.
Yep.
Titans off the 200.
There you go. And
that was the NVIDIA entry for us.
Let me show you that real quick. I'm sorry, Don. I literally forgot we talked about TOTS last week.
Oh, TOTS.
There you go.
It was a good show last week.
Yeah, I enjoyed it.
Yeah.
I'll show you where to find it if you missed it. And so you have this massive thrust now in stocks that have not worked. And look, there's like the world is this big, right? And then like people that invest in the stock market, whether it's passive or active, is like this big. and then the people that actually are active participants in the market, it's like this big.
Yeah.
And you'd be surprised, like people who are super fans of the markets, are like they've got CNBC on and Bloomberg on, like they've got all
they
the
got 3 monitors and as always tickers running.
There are some shows at CNBC that average less than 50,000 viewers.
Mm-hmm.
Like it's The View, the daytime television show The View gets like 10 times more viewers than a CNBC show. And to equate it, to show you how small of a group of people we truly are, even though this amount of money that's in the markets, it controls the U.S. retirement system, because we have Social Security, but it's not like Europe's Social Security. Like our Social Security is based on you in an ownership society buying equities, whether passively or actively, and having those things go into 401ks and IRAs, and then those things inflate up as you get older, and then you cash out as you retire, so you have money. Like that's the U.S. retirement system.
Yes.
This thing can't fall apart.
No.
But if you want to think about how small of a group we are, what's a niche podcast you listen to? Like I'm really into XYZ, and it's like 3 people listen to it. You know what I mean?
Sure.
Like we're a niche podcast.
Right.
We've built the business off of being niche and word of mouth.
And you may feel like you have a dedicated community, but it's still small.
So
yeah,
small.
It's still a bit of a small
Incredibly
pond.
small.
Yeah, right.
Yeah.
But an important pond.
Mm-hmm.
Yeah. 'Cause we love
And
it.
so the people that understand or even discuss, hey, quad witching today, right?
Yeah.
And truth be told, it's not even true quad witching. They stopped single stock futures. It's triple witching, but we just call it quad witching because that's what people are used to call it. And so there's this really esoteric group of traders that trade massive amounts of options on the indices and they have a vested interest in collecting the premium that they sold, and that's what controls price. It's algorithmic. And so here you have what's the NDX up right now? Yeah, and the NDX is up 1% today, in the face of all the horrible headlines out of the Ukraine, in the face of Bullard's note this morning, and so just coming to grips with all of that, I think makes life extremely helpful. And so I think, because I've got two. I've got one other theory on this.
Okay.
So I've talked about rebalancing, right?
Yes.
So I set up, and if it hasn't been clear, because I didn't lay out, I didn't give you. I buried the headline.
Right. We didn't put the table of contents up front.
I didn't. I should have.
Yeah, that's okay.
So what I wanted to do was, I wanted to give you a fact-based look, and I want Don had a fact-based thing he looked at. That's what a technical thing is, right?
Mm-hmm.
It's not pull it out of your buttski.
No,
it's on a chart. It's something that you can kind of hang your hat on.
Tangible evidence.
Thank you.
Yeah.
And so
Just the facts, ma'am.
Just the facts.
He dragged. It's his dragnets. We should label it that.
Friday.
Yeah.
Yeah.
The Joe Friday signal.
The Joe Friday signal.
Yeah, he got the Joe. Don got the Joe Friday, so we took action.
All right. Okay.
And so I saw VIX uninvert, and that's why I talk about it.
Mm-hmm.
Then I gave you something a little more esoteric in rebalancing, and that's why, because people want to understand. It's not enough to just go, hey, it's a market and anything can happen. Like that's not fair. Like in the videos, we show you condensed views of nothing but red meat and what's going on. Here we get to talk a little bit about it to give you a little bit more wherewithal. So when you see it again, you understand it again. You can apply the knowledge. There's one other thing that's being discussed. It's not my theory, but I've seen it enough times now that I want to talk about it. So the backdrop of, and by the way, did you see COVID's back? Don, COVID's back, right?
No, I love it. The variant.
Yeah,
Fauci
yeah.
came out yesterday.
It's like
Lock it all
Eminem.
down.
Are you talking about this new China lockdown?
There's
I heard something
BA2,
about that.
BA2.
Yeah, like the Congress wants more money for COVID COVID
Nonsense.
relief.
Yeah.
Yeah. And so more money for COVID relief. COVID is, I saw Fauci, they wheeled Fauci back out on TV.
Yeah.
And
Yep.
he hasn't been out in TV.
Well,
They kind of locked him up for a while.
If that headline about China is true, they locked down like 10 million people. One world power moves, and the others have to
they're
respond.
back at work. It was a 2-day lockdown.
Oh, okay.
To flatten the curve.
Hours, huh? Yeah.
To flatten the curve.
Yeah.
48 hours.
Wow.
They opened that, and seriously, they closed down an Apple and a Tesla plant. They got those. And I'm not making this up. They locked them down to flatten the curve.
Yeah.
They got them locked down for 48 hours.
They closed down an Apple and a Tesla plant. That sounds like the start of a bad joke. Apple and a Tesla plant walk into a bar.
Yes.
Yeah.
So COVID's back. So you've got Ukraine. You've got COVID. You've got what could be setting up is some massive stagflation, which is what
Sure.
we talked about in with QE and Bullard.
Yeah.
And housing. I give you now what people are saying the market is truly doing. You ready for it?
I don't know if I am.
This is where I actually wish Danny would just appear,
Yeah.
because Danny would have a lot to say about
I'm
this.
sure you would.
The market, you've heard me say this. The market is a forward-looking vehicle by 6 to 8 months.
Yes.
So we're in month 3. 8 months from now, we're in November. That the missteps of the Fed by not raising rates sooner, by having to get more aggressive later, which is what Bullard said,
Yes.
is really going to lead to, stand by, Zach, quantitative easing version number 5, where we get stimulus checks because there'll be such demand destruction that instead of sending the market into a recession, we'll give the people more money. And
Pelosi called for him yesterday
Oh, she did?
because of high gas prices and food prices.
I did not know that.
I
No,
missed
it's
that.
just a crutch. Anytime things go against you, you just
So,
call out for more stimulus money, make everyone happy.
well, that's that. I want to talk about. Let's explore this for just 3
It's a
minutes.
move.
And by the way, my 3 minutes is probably another 12. So
At
I want
least.
to, at a minimum. Let's talk about this for a second. What we have here now is MMT, modern monetary theory, where we just pay people. We just give you. I don't want to come out. I want people to understand that I might sound like a bear. I might sound anti-people. I'm not. I just want to talk about this.
Yeah.
Timmy
what-
Bear's in the other room. Do you want me to go get him real quick?
No, I think we can put him up on the right now on the art tile that lets
thumbnail?
you
Yeah,
the
what do we put
thumbnail
on that?
lets you know what we're talking about. We've got Danny.
I was going
right?
to put him on like a skiing emoji.
Can you
That
get
might be
Danny
good.
in the car with skis on the rack?
Oh, yeah.
and-
That's a
and-
good bit.
And
yeah.
can we get his wife?
Okay, I don't know. I don't know if I have a picture of her, but
Just make it up.
Oh, okay.
We need
I
Lindsey Vaughn with Danny's face on.
there you go.
Oh my gosh! There. Can we do? Wait, hold on.
put him in the-
Are we able to do that?
Maybe. I was going to put him in the National Lampoon
Wait, did she-
truckster with Beverly D'Angelo next to him.
Oh my
Maybe
God!
that's
Let's
the
do
way-
that. Yeah, let's do that.
That's the way to do it.
Yeah, let's
Holiday Road,
let's make
baby.
sure there's horns on the front.
Okay.
Yeah,
Right.
yeah,
It's getting real complicated.
yeah. Well,
I
what
would
could?
pay for Danny's ski highlights. You know he's showing off going down the slope.
Oh, you know he's cutting it
Help
up.
sure.
himself.
If anyone
He's got some kind of loud
Yeah.
pants. I love it.
Yeah, and
He's doing like helicopters.
Oh, hey, by the way, if you could do that on the side, moguls,
okay.
Danny's face on Boss Hogg's body in a flip.
All right.
Like find an Olympic person who's doing the moguls or the
Moguls.
or the ski jump. I forget what we watched a ton of it with
Yeah.
Remy. He loved it.
All right.
And so like shredding, but shredding on someone's like clearly they can't do this type body, which I would think would be Boss Hogg.
Yeah.
Oh, or King Kong Bundy
There you go.
from WWE.
King Kong Bundy.
King Kong Bundy.
My God.
Right. Like that seems. Oh, I got Don there. That seems like
good
Danny
one,
in
yeah.
a. You know what? King Kong Bundy or George the Animal Steel in a singlet or in the trunks.
Perfect.
Danny's head.
Yep.
Shredding off to the side, right in the mountains of Colorado.
Yes.
And then in the car getting there.
All right. Yes. It'll be like a scene. Storybook thing.
Oh, it's so.
YouTube.com/Revere Asset Management is where you can find these.
Oh,
wonderful
you know what?
videos.
Yeah, let's do that. But that's
where
what
can people find these things?
That's where I was going to.
wow.
Yeah, like listen, if
Yeah.
you ever want to tell friends how they're like, I'm not going on their site. They're going to spam me. Listen, if you subscribe to get our videos, that's all we send you. We never ever talk to you. If you want to absolutely positively ask us questions, you got to email us by hitting. You go to about about strategy, and you just scroll your little mouse down, see our portfolios that we manage here, and you can see the shop, right? And then you're like, you know what? I just don't want to email y'all. I want to call y'all. And you just call. And if you're on your mobile phone, you literally just touch it.
Mm-hmm.
And an operator is standing by to connect you.
New website looks good. Come check it out.
Yeah, and so it's all there for you. But you tell your friends, tell your neighbors. Just tell them to go to YouTube, search for Vera Asset. All of our annals.
Analytics?
I'm pretty sure it's not annals.
Analysis?
Annals. What, like a volume of videos?
Yeah,
Don, is
I'd
it?
say let's just avoid it.
Yeah, right.
Oh yeah.
Our library.
We should
of
just not
content.
call it our annals of videos. Yes. Yes,
Very
we
much.
should. Yes,
Very
we
much
should.
not calling it that.
Yes, I think it's annals. I think annals is the word I'm looking for.
Like the annals of history.
Yes, but how?
Ugh.
Don't want that to be the annals of history. Woo.
Yeah.
What are you getting there?
I like that you didn't stop to stumble and think of a new word. You just rolled right through with it. Barreled ahead.
That's what we do here.
Always.
So let's discuss MMT for a second,
Yes.
because I have a note here in my I have a note here that's not a big time strategy. We've talked about it, but not the way I'm about to phrase it. Don, so I have a theory that the market, because of MMT, let me get these charts back. This is fine. Because of MMT, can you put the voice back up there for me?
I absolutely can.
Thanks. What Hunter said is so interesting. We're just going to pay the people. That's what you said, Hunter. Is that right? Okay.
Yeah, just using it, at least in this theory, using it as a crutch, more or less.
But that means, what that means is that the market won't ever go down long term. That we're not going to see a 2008 again. That's the whole point. That we never see that level of demand destruction, which was caused by upwards of 15 consecutive rate raises from 05 through 07. Oil was doing what it's doing right now, except oil's doing it more than it was in that period. And housing got destroyed. Like, it's all there. But to prevent that, we're going to just pay them, pay everybody. And that's going to, so Don, the stat you released February 24th, Thursday, we did the show Friday on the 25th. And the market got what percentage below the 21? And that historically to you, or that you've seen, is when you step in and try to buy it. Is it 10%?
Yeah, it's the 50-day, 8 to 10%. Yeah.
8 to 10% below the 50-day. That is a historic oversold level. And it makes sense to go in there and buy it, especially when it's coupled with an incredibly high put-call ratio. It doesn't feel good. But then you get some confirmation with some massive tick buying. And that's what I think you wait for. Now, we're just discussing this like we're friends at the pub, right? And so if you just don't even try to short it. It's so hard.
Are you saying wait for it again to happen?
Wait for it again to happen. And when you, don't even, if you're at home and you're frustrated by this market, wait for the destruction to happen, knowing that the backdrop is there's a put somewhere. It's either the Fed put or the government put, meaning that there's going to be a floor put under the markets and you can go in and buy it. And what people are theorizing, and it's a theory, it's not my theory, I just find it super duper interesting, that QE5 is already being priced in. That the markets, on the backdrop of everything we talked about at the top of the show, are actually rallying because the market, being a forward-looking vehicle, is going to be saved by tax dollars.
It's an interesting theory.
QE5 is already being priced in. That there's going to be monetary, that the Fed's going to cause, I don't know about a crisis, but it's going to cause the market to go down so low that the government's going to step in with stimulus checks. And by the way, the easiest thing they can do right now is relax the federal income tax, relax the federal tax on gasoline, which I believe is 18 cents a gallon. Okay, so that'll put pressure on the states to do a state tax holiday, right? And so then you'll get upwards of anywhere, depending on your state, upwards of 30 to 60 cents of price relief on a gallon of gas. And then you'll get they won't call them price controls, but the political pressure. They're going to drag the oil CEOs up to the hill, and they're going to skewer them like they did the banking CEOs after '08. And they're going to put political pressure on them to, whether it's feasible or not, I don't know their business well enough, that they're going to have to sell their products at cost or lower. Probably not good for the oil stock. Like, there's a lot of interesting dynamics happening here.
Mm-hmm.
But the thesis that the government's going to step in and do what they did in 2020 should stagflation hit, should something god awful happen from Ukraine and Russia, should something awful come about from a COVID variant, and the markets, because the markets aren't feeling, right? They're not emotional. They're algorithms. They're computer programs. They're ones and zeros, man. And the markets rally. And so a lot of people have trouble reconciling that. And I don't think that QE5 theory is too far off the bat. Because you can talk about we have a strong economy. The reports that we get that signify that we have a strong economy are all looking backwards. The only forward-looking reports that you get, and I know there's a whole leading indicators report. The most important one to me is consumer confidence, which has been dropping tremendously. And if without confidence in the consumers to go out and spend money, an economy that's 70% service-based is absolutely in trouble. But they're not going to let it fail. And I kind of think that QE5. Can you give me a QE5 graphic? Is there something fun we can do there?
QE5.
You know, for stagflation,
yeah.
Can we find a picture of Bullard hunting, trying to kill inflation?
Yeah, like
but a stag is a deer.
Right, like a deer getting inflated like a balloon. I mean, stagflation, you can't go wrong.
That's what I'm talking about.
Nobody knows who Bullard is if you put his picture.
Okay. Well, since nobody knows who Bullard is, let's just do Danny.
Perfect.
Okay.
Danny on Bullard's body. That's the secret.
Yeah, that's the secret. Yeah, Danny's face, Bullard's body, hunting Bambi,
yes.
who happens to be a balloon in the Macy's Day Thanksgiving Parade. So now, Don, what is before you do 21 over 21? I just want to isolate the technical signal you saw that led you to do some buying on Thursday. Please.
It was more confirmation, not the trigger itself. The thing that forced the buying was the price and volume action in the indexes and institutional quality stocks. And but the what I talked about in the video is a stochastic that's part of MarketSmith software that we use, and on a weekly chart of the S&P 500, we're coming back up off of oversold and heading higher. And the last 3 or 4 times that happened on the chart that it showed, it was, let's just say it puts the risk reward in your favor.
Mm-hmm.
If it fails, it fails. We're prepared either way. But big moves made in the indexes each of the last 4 times. And it was coming off of the bear market in Q4 2018. It was coming off of the COVID low. It was coming back a pullback earlier than 2018. But it's the same signal. It's fact-based. It's not opinion-based. And it just is a good risk-reward scenario to start taking long positions in the indexes and in leading stocks. And that's what we started doing this week.
And what's interesting to note, if you're at home listening and we talk all those bearish things at the top of the show, there's nothing in that analysis. When Don says it's fact-based, that's the beauty of a technical signal. And that's why we talk about them so much on the show, because there's 1,000,001 reasons to not like the economy, not like the market. But if you're leading if you're trying to figure out and leading with your heart, you have no fight. You have no chance against the algorithms. You have no chance against the machines that truly control the market right now. And so those representations help give you a sight picture of what's really happening. So appreciate the explanation. If you want to see the whole video, reviewasset.com. It is the video labeled Market Insight, this technical indicator says buy +5 growth leaders. Hunter, with that. Oh, Hunter, I wanted to show you this, man. I saw an interesting story. Hunter is our resident gambling expert, not because he's a degenerate, but because he enjoys parlays, and I think he enjoys the math behind parlays and a whole bunch of other things that make Hunter interesting to talk to. I enjoy the conversations we have around gambling. Just want to show you some daily charts of Penn, DKNG. And I read something, Hunter, that I purposely didn't talk. I was actually gonna text you the article, and I'm like, no, I don't want to do that. So market share of gambling, right? Like DraftKings had an issue last night, and so where their app went down and people couldn't reinvest their wins and more, which means the house can't get their money back that people had just won, and it was down for about an hour. But that's not the point of the story. It's how you acquire customers. Because right now, all these apps, what is there? PointsBet, Hunter, DraftKings, Penn. It's depending upon the state you live in. MGM.
MGM's a big one. MGM, DraftKings, Penn.
The Caesar
has an app, I think, now too. So you got all the players kind of stepping in now.
Yep. And so
commoditized.
Yeah, that's exactly it. And so then it comes down to if there's really, I mean, you either win or you don't, right? And so user experience being part of the crew. So what Penn did by buying Barstool, parts of Barstool, they're in Pennsylvania, their percentage of take to how much they spend on marketing is 30%. And I don't know if that's, like historically what percentage of marketing you have to spend no matter the industry.
30% return on marketing is pretty good. Yeah.
Okay. So DraftKings and the other apps in Pennsylvania that are allowed to participate in the gambling in Pennsylvania, they're 100% or higher.
Oh, well.
So when you see demand destruction is the word we'll use. Demand destruction is the word of the day on Friday. Today's episode has been brought to you by the letters D and D for demand destruction.
Demand destruction,
not Dungeons and Dragons. And so when you see this high of 74 down to 20 or 19, like what happened? They're spending 100%. Now this is one state. They're spending in Pennsylvania 100% of their take on marketing. Eventually, you have to make money, right? Eventually. And so I found all that interesting. Hunter, what app do does it matter? Are you app agnostic?
Well, so it does not matter. It really just depends on what's legal in your state, because as we know, it varies state to state. But DraftKings is typically more used for fantasy gambling, which is a little bit different than your parlays and your betting on spreads or straight up winners. Penn would be more of your traditional casino, more of just your standard parlays, no fantasy gambling. So they do have a little bit of different exposure, but DraftKings, the problem with DraftKings and some of these others is just like you said, they're having to spend so much to get customers to spend that same amount of money on their platform. Too many people go on there and they lose $20, lose $50, and they never play again. And that's what they're in the abyss of trying to figure out how to get people to stay on their app, spend more money when they first get on, that type of thing. Because right now, obviously, stock prices, Penn is now at a less than 1 PE. Not very long ago, they were much, much, much higher than that. So they've certainly had that re-rating, as we've talked about, or re-evaluation, PE compression, that type of stuff go on.
Super interesting. I didn't realize Penn was down to a less than 1 PE. Which makes me want to do a study now on when do stocks bounce based on. I bet you there's a way to do that. Do a study.
Yep. Surely.
I'm gonna look into that. Hunter, what are you looking at, man? What's on your watch list?
Yeah, man. So I'm gonna kind of piggyback off of what you guys did. So Don talked about a technical buy indicator, essentially the weekly stochastic, which is very similar to like a MACD if you've ever heard of that before. And then Tim, you talked about the VIX uninverting. So two not related to individual stocks. In Don's case, it's related to the index. Tim, in your case, it's related to the broad market and volatility levels. So what I was going to show was some examples of stock and a sector also showing or flashing possible buy indicators / big time changes in character. So we already talked about one, but Tim, if you'll just pull up NVIDIA on a daily.
You got it.
And these are just some other signals you can look for in what I would call imperative stocks to the market. And what the two stocks we're about to look at are NVIDIA and Tesla, as we all know, very, very important to the U.S. economy as well as U.S. stock market. But what I want to highlight here on NVIDIA is this is the first time since the beginning of the year that NVIDIA has closed above the 50, and we're heading for 2 consecutive closes above the 50. Okay. Not to mention just that, but you've also got what looks to be like a successful 821 cross.
Heck
It
yeah.
has not been able to muster that up. Last time you had the 8 basically touched the 21 and it came back down right there in the middle of the screen where Tim marked. But so the point here is we're above a downtrend line on NVIDIA for the first time since the start of the year. We're back above the 21, the 8, the 200, and the 50 for some consecutive closes since the first day of the year. So over the last 2.5 months, this is a big change in character from how NVIDIA has traded since the beginning of the year compared to the last couple of days. So doing some things that are encouraging, especially from a risk on standpoint, you're seeing some of that happen. And then Tim, if you'll pull up Tesla on a daily, it's pretty much a very similar situation. The only exception is Tesla is getting above the 21 really for the first time since the middle of January. We've talked about this on our daily market insights. We've talked about it on the podcast that 21-day exponential moving average had been a brick wall on Tesla for the better part of the last 2 months. Over the last 2 days, we have now closed above it. Looks like we're going to have 2 consecutive closes above the 21. So here's 2, you could call them indicators, you can call it whatever you want, but 2 big time changes in the negative character that we had seen in the market, particularly in those 2 stocks, showing some signs of life here. And then lastly, Tim, if you can pull up XLY, this is a sector. So basically, we're going to kind of be looking at it in the same light. And XLY, this is your consumer discretionary, has been about as bad as it can be as far as sectors go year to date. But we have now had 3 consecutive closes above the 21. We're borderline getting an 821 cross, and we haven't had consecutive closes above the 21 since the year started on a sector here. This is XLY, consumer discretionary, dominated by companies like Amazon, for example. But I just wanted to show this because not only do you have, potentially a stochastic crossover, or you've got the VIX uninverting, take a look at these leading stocks as they can provide some indication as well as to what's going on. And obviously we've seen Tesla and NVIDIA follow through nicely today after that initial what looked like to be a change in character. So I just wanted to show those a little bit of a different perspective. And then Tim, I actually do still have a pretty good bit of stocks too. So I'm going to start running through those pretty quick if that's cool. First, solar. We've talked about these a little bit. Tim, you can pull up SEDG, SEDG.
Read your mind, brother.
This is kind of one of the hottest names in the group right now. They had a secondary offering come out, some news basically over the last week. I believe it was priced today, and quickly reclaimed the 300 level, quickly reclaimed the 21 EMA. So this has been a very volatile sector. There's no getting around it. Specifically, SEDG, this company here, and Enphase, 2 of the leaders, extremely volatile price movement. So just be aware of that if this is a position that you're considering. They can easily be up 5-10% and down 5-10% on any given day. So keep that in mind. But we're seeing constructive action out of these names. Enphase trying to get back above the 200-day. Solar, the ETF itself, TAN, hanging out, respecting the 8-day after coming back to test the 21. So this area is actually acting pretty well. And interestingly enough, it's acting well when energy prices are soaring and energy stocks are soaring. So it's something to think about here is solar becoming more of a viable alternative as energy prices, not just crude oil, but natural gas, and things of other natures like that, as they become more and more expensive due to inflation, does solar begin to be looked at as a much more viable alternative here in the near future? So something to think about. Prices obviously reflecting something going on. There's some pretty big volume, not just on the ETF, but on those individual stocks as well over the last couple of weeks. So moving on, Tim, we pull up XLV, the healthcare ETF.
Yes.
So this sector has been showing some really nice strength and also hasn't been extremely volatile over the last week or two, while the market has been very volatile. Really respecting the 8-day if you're looking at XLV here, since it kind of came back and consolidated in the moving averages, moving up nicely over the last 5 or 6 days, as you can see there. But one of the best names in the group is UNH, and that's probably your most recognized managed medical care name out there, but it's actually picking up a nice little double bottom pattern. It's poking its head above that 500 level, trying to clear those previous pivots. As you can see, Tim has that first one on the left-hand side is 509.23, and the second high is right there around 500. This healthcare sector, you can see the RS line if you pull this up in MarketSmith, not only on the XLV sector ETF, but on a lot of these stocks, continuing to angle up more or less for the entirety of 2022. So we're seeing this healthcare area hang in there and act well as some of the big pharma type names like Pfizer, for example. Tim, if you pull up PFE, this has had a pretty nice couple of weeks too. Some of these big names, Pfizer, Regeneron, names such as that, really have had a good response over the last month or so. And lastly, Tim, I'm going to move through these pretty quickly. Gold miners continuing to act pretty well. You can pull up GDX. We don't have to necessarily run through the individual names, but pulling back after a really strong move, but it appears that they are putting in a healthy consolidation, maybe even a little bit of a flag there. And last couple here, Tim, and this is going to be the last three. So PWR, this is a ticker we've talked about a decent bit on the show. But just as of recent, had a gap up on earnings that has led to this big run back to these 52-week highs here, right around 125. So this one, another one where the RS line is continuing to angle upwards, trading near highs. Also, this is a company that has some exposure to the renewable energy space, as well as they do construction for oil and gas pipelines and things like that. But a name to keep an eye on as it came across some of my screens. Really nice RS over the last few weeks. Another one that we've been talking about, Tim, DAR. I think we talked about this one last Friday, if I'm not mistaken. Came back in and kind of tested that 200-day and has since moved up a little bit off of that, putting in a nice cup and handle action on the daily time frame, really going back to about October, that 85.98 high to this point in time. And then last one, Tim, I know I went through a lot here, but DAC. This is a transportation shipping company, which has been one of the hottest
I'm
sectors
sorry.
for areas.
Which? Give me that ticker.
DAC, my bad.
Thank you.
D.
Delta. I'm like that. Go ahead, buddy.
Yep. So a nice trip to the 21 ultimately rounded off, and we've come back up and we're challenging highs. We actually have made new highs. What I'm looking for here on this one is if it pulls back into that pivot. So the first pivot was 102.95. It got through that. We're still above that. But what I'm watching for is if that 8 EMA moves up in confluence with the retest of that pivot. So on DAC, say it comes back and test 102, 103-ish, and say that corresponds to the 8-day, that's what you're looking for here, as turning that previous high into support and also having that 8 be a little bit of a added bonus there. So that's kind of what I'm watching on DAC. This has been one of the strongest sectors. ZIM is the big leader here, but DAC doesn't look too bad either. So I know that was a lot of information, man, but that is going to wrap it up for me.
Love it. Don, what you got, buddy?
A piece of ZIM, which is also a leading transportation ship company. As of Monday and Tuesday, 9 of the 21 over 21 had broken below their 21. As of Friday, right now when we're filming this, 8 of those 9 have recovered the 21, and that's symbolic of what's going on with the market. It seems Monday and Tuesday was the last shakeout. We rallied Tuesday going into the Fed. We had a harsh pullback when the Fed statement was released. But then afterwards, we blew through the 4290 resistance area on the S&P that had been stopping any forward progress. And then on Thursday, we pulled back and tried to test that same level, 4300, 4290 on the S&P and also on the NASDAQ 100. Buyers came back in supporting it, so that's a very important concept of resistance flipping to support. And right now we're testing resistance at that declining big red line that you're showing there. That's the 50-day moving average on the S&P 500. This is the fourth day up off the bottom. I'd like to see a little bit of sideways action here to allow some stocks to catch their breath. There were 5 leaders that I talked about on Thursday's video. Check that out. Hunter will be doing the big show tonight, and we'll be putting together the updated 21-21 list. As of right now, only one is dropping off. But sometimes we punt some out if some really strong stocks need to nose their way in there to the 21/21. So tune in for that tonight.
I'll tell you what, with that, Zach, we're
Yes.
coming to the end of what I think is a fantastic show.
Uh-huh.
What we're going to do here is have Real Fake Danny do the short outro that Danny is known for.
Okay.
And then we're going to come back to me for one last thing. Is that Don, are you ready for Real Fake Danny?
Always ready.
Oh, see, he's here.
Sure. Yeah.
Okay, Real Fake Danny, tell us everything we need to know when we close the show out, and I'll come back for one last thing.
Well, folks, if you like what you heard here, tell your friends, tell your neighbors, go on to revereasset.com. You can call us anytime at 855-REAL-WEALTH. That's 855-732-5932. And we'll talk to you next week on Your Money.
My goodness,
Almost
that was
worked.
so great.
I tightened up a little.
That was perfect.
It's not bad.
Do you want to do it again?
No, I think
You got it?
I'll blow the head up next time. I'll make it
Do you
work.
think Danny now is going to make them watch the show on the drive back from Colorado?
I don't think that.
I
no.
do. I've got it.
You could just there you go. Yeah, you could just line up. Next time.
Next time?
Oh yeah.
Yeah.
Next time we need to sign off. We yeah.
That's so
Golly.
awesome.
You
Well,
could get his lower lip to flap while I'm talking. That would be just
That would be yeah.
that would be
trying-
next level.
I'll do it like the
That was an old-
Canadians in South Park.
that's
yeah,
an
I'll
old,
move the bottom of his mouth. Yeah, perfect.
That's an old bit, I think, from Conan O'Brien. Where
that came from?
he'd have people.
The jib jabs flapping.
Yeah. Stock News Market Lovers, listen, one last thing here. If you want to see the note that Bullard put out, you can shoot me a note. We'll try to put it. I'll get this note in the YouTube show notes and the website show notes that Zach's about to post. But Bullard explains his recent FOMC descent, and it is a super interesting read. And so, with that, we'll see you next week on Your Money.